I'm Marlene Bertrand, the broker for Bertrand Realty. Thank you for joining me. Now, today I'd like to talk to you about principal, interest, tax, and insurance. And in the industry, sometimes we call it PITI. Some people even call it PT. And as a real estate agent, you just need to be familiar with these alternate terms so that when people are talking to you, you know what they mean when they say PITI or PD. Now, the P in PITI stands for principal, and the principal is the amount, the monthly amount that a borrower would have to pay on a loan that they've taken out. The interest is the interest rate calculated on a monthly basis, and that is associated with the loan as well. The T stands for taxes, and we're talking about property taxes. So the property taxes, basically they're paid every 6 months. However, we calculate the monthly amount and we attach that to your monthly mortgage payments. The second I in PITI stands for insurance, and here we're talking about homeowners insurance. Now, whenever you get a loan, a lender is going to require the borrower to have homeowners insurance. So we just calculate the monthly amount, and that's all associated with the PITI. Now, you're going to need a financial calculator to be able to calculate the PITI. And when I was first in the industry about 32 years ago, we had to carry around these big old calculators, and they did the job, and we needed the tool. But I have discovered that you can find a financial calculator that works on your phone. So whether you have an Apple or an Android, just go to the proper store and search through the number of financial calculators and pick one that you feel will work the best for you. Now, your financial calculator will need to be able to compute the principal and interest on an amortized basis. And amortized means that, let's say it's a 30-year loan. You need to be able to calculate the monthly payments of a loan over a 30-year period. So be sure to get a financial calculator that can do that. Most of them do, so I wouldn't be too worried about that. Now, in a moment, I'm going to dive into PITI a little more closely so that as you're using your financial calculator, you'll know which buttons to push, which functions serve to help you get to the number that you are seeking. So you might be wondering, as a real estate agent, why do I need to know how to calculate the PITI? And let me tell you, that's a very good question. The reason you, as the real estate agent, want to know how to calculate the PITI is so that you can let your buyer know without having to send them to the mortgage broker or the lender every 5 minutes when they change their mind about how much of a home they want to purchase. Let's say you're out in the field, you see a home that's valued at $350,000. They know they qualify for that. They know what their monthly payments are going to be. But let's say they see one, it's $400,000. They haven't really talked to their lender or mortgage broker about a $400,000 home. But you as the agent can sit right there on the spot with them, bring out your financial calculator, calculate what the monthly payments will be, and now you have a tool to be able to counsel the buyer on whether or not they can go as high as the $400,000 home. So basically it's a tool, and you're helping in a way that you would not be able to help them on the spot if you didn't know how to calculate the PITI. So let me delve a little bit more into the PITI so that as you're selecting your financial calculator, you'll understand better what the functions are that you will need to help serve you better. Most digital calculators have the same functions. It looks a little daunting, but don't worry. As a real estate agent, you won't have to use all of these keys. Basically, you will just need to use the numeric keys to enter in the factors related to the loan. Your basic mathematical symbols: the percent key, division, multiplication, minus, and the plus sign. And finally, the loan function keys. So let's get started. First, we need some basic information about the purchase price, down payment, interest rate, and amortization period. For practice, let's create a loan scenario by making the following assumptions. The purchase price is $400,000. The buyer is putting down 3.5%. This gives us a loan amount of $386,000. The interest rate is 4%, and this loan will be amortized over 30 years. To get the loan amount, first, let's calculate the down payment. On your calculator, you will enter 400,000 times 3.5%. Then hit the equal key, and your screen will show you 14,000. Now, hit the minus key, then enter 400,000. Then the equal key, and your screen will show you negative 386,000. This is your loan amount. Now, one word of caution is, as you are using your calculator to compute figures, do not clear your calculator, or all the calculations for that entry will be lost. Now that you know what the loan amount is, you are going to use your calculator's loan function keys to calculate the principal and interest. Enter the loan amount of $386,000, then push the key that says loan amount. Now, enter the interest rate. Touch the number 4, then hit the key that says INT for interest. For the amortization period, let's enter the number 30, then hit the key that says term. Then just hit the key that says PMT for payment. Your screen will now show you the P&I, which equals $1,842.82. Good. Now, let's keep this number handy. Maybe just write it down on your notepad. In fact, on all of the computations for the PITI, jot those numbers down, because in the end, you will need to add up the individual components to get the final number. Property tax calculations are based on the value of the house. In our scenario, the value of the house is $400,000. In this scenario, we will estimate the property tax as 1.2%. But in the real world, you will need to find out what the actual tax rate is if you want to compute actual numbers. You can ask the seller what they pay for property taxes, or you can find out from the county tax records. Also, agents, the simple way to do this, if you happen to be in a position to use Prospector, go under the Tax tab and search for the property address. There, you will be able to see what the yearly taxes are, and then divide that number by 12. But let's say you are working on the fly and you just need to estimate what the taxes are. A safe rate to use is 1.2%. But just let the client know you are merely estimating. The estimate will generally be either spot on or very close to reality, as most counties in California are running at about the same tax rate. Anyway, when you do not have access to the actual tax rate, here is how you estimate the monthly taxes. On your calculator, enter the value of the house. In our scenario, this amount is $400,000. So you want to multiply that by 1.2%. Hit the equal sign, and you will see an amount of $4,800. Now divide 4,800 by 12, and it will give you the monthly amount of $400. Jot this number down. Now, let's calculate the estimated monthly insurance amount. And I say estimate because we really don't know what the actual insurance amount will be. Only the insurance agent can quote the exact amount. But as agents, we should be able to calculate estimates for clients. First of all, you must know that insurance calculations are based on the loan amount. And there is a formula you will need to use for this calculation. That formula is as follows: loan amount times 0.0035 equals a yearly amount. And you will need to divide the yearly amount by 12 to get the monthly amount to be used to arrive at your PITI. So in our scenario, you will enter $386,000, then multiply that by 0.0035, hit the equal sign, and now you will see that it equals $4,800. Now divide that amount by 12, hit the equal key, and you will receive the result of $112.58. Jot this number down. Now, let's add the results all together to get the PITI. Add $1,842.82 plus $400 plus $112.58, and your PITI is $2,355.40. Now there you have it. Instructions for using your financial calculator to compute the principal, interest, tax, and insurance. The PITI, or PITI. Well, that's all I have for you today. Thank you for joining me as I talked about principal, interest, tax, and insurance. And I hope that you understand now what PITI is, what PITI is, and how knowing how to use a financial calculator to help you compute your buyer's monthly cost will help you be a better, more helpful real estate agent to them.